Alert Steel is a retailer of steel and steel-related products and services to the construction, manufacturing and building industries. The company was established in 1979 and listed on the JSE's Altex bourse in 2007. Alert Steel has a market cap of 81.8 million rand, but makes no profits and pays no dividends. I don't want to say that line again, but when you look,
sounds so definitive.
Yes. Okay, so looking at Alert Steel.
Vein on Scala Comp, Pretoria-based entrepreneur, built this business. They listed in that time when they were really flourishing. They got into plumbing. They bought all sorts of businesses around the sort of Gauteng and Limpopo province, but had a spectacular crash. It all came thundering down around their ears. They traded at R2.50 at one point, now trading at 2 cents. The company is basically, he has lost control of it. There's a crowd called Capital Africa Steel that have sort of effectively taken over, underwritten various rights issues. They've disposed of some of the businesses. So they're trying to get back to their roots as a steel merchant. And I guess it's related to the construction cycle, which is a little bit iffy at the moment. They're planning a share consolidation, and it'd actually be interesting for you to go into that. What normally happens with companies that are doing that? I mean, is that a plus for you?
No, it's actually often a negative because you get downward selling pressure. The reason they do a share consolidation, they've got a rights issue coming at 2.8 cents. Now the problem is, just by mechanics of having cents, you can't trade in half cents in the JSE. So their bidding spread is 2 cents to 3 cents or 1 cent to 2 cents, where in reality their fair value perhaps lies in between that. So if they do 101 to share consolidation, you'd think from 2 cents they jump to 200 cents, but they actually sold down to maybe 150 cents. Because you're trading in that spread between the cent range. Does that make sense?
Yeah,
what I've said? So it's often not a positive, but it's a necessary evil. These guys have to take the hit and do it to make their shares tradable and realistic.
So hot or not?
Not at all. What's your competitive advantage in this business? Yeah, there's Argent. You're really a price taker into metal. I don't see the competitive advantage, and I've actually got something very much against the management incentives for the turnaround team coming in. Their management incentives hinge on EBITDA. Now, if you know anything about accounting and M&A, you can manipulate EBITDA, and not illegally, legally. You can manipulate EBITDA extremely well because it's not shareholder level, it is actually just EBITDA. You know, buy things in-house so that you depreciate them and they're not operating expenses. Buy more companies, you know, convert this into that. And if that's your turnaround incentive based on that, that's really not a very strong incentive. Not hot at all, don't like the positioning, not an impressive manager.
All right, Paul, hot or not?
Well, I'm slightly more positive about the incoming guys. They seem a bit more credible to me, and I know Mclachlan, who's the chairman, is a sort of old, experienced private equity hand. But notwithstanding that, I think the fact that the old control consortium is now out could create some further selling pressure. So the minute it perks up, they might be inclined to sell. So I'm also going to go with not hot at the current level.
Also careful of the coming dilution. I mean, they've had a rights issue, there's another one coming. Who knows what the full effects of that dilution will be.
So 2 not hots on Alert